All right. Well, you guys will just have to catch the replay. Morning, everybody. So, guys, don't sleep on these economic events, right? If you are trying to trade on an intraday basis in front of or around these time frames, it's just going to trigger your stops. You're going to get kicked out. The market's going to make these broad, sweeping gestures. And unless you're running with absolutely no stop at all, you're just going to get stopped out, right? So, if you are trading literally in this time frame, you put on a trade at 9:42, at 9:45 you're going to get stopped out. It's almost guaranteed, unless you're using a really wide stop, which means you may as well have no stop at all, or you just happen to luckily get the market shoving in the right direction and it doesn't hit you. All right, so there's absolutely no reason to try to day trade in front of these. And when we have a day like this, when it's this busy, we literally have an economic event every hour all the way to lunch. This is just basically telling you just stand down through the entire morning or get your profit, stand aside, look for another opportunity, and watch the clock. Watch the clock. I'm telling you, it's one of the best indicators you could put on your chart. Watch the clock. There's a lot of economic reports that come out that are not in this list. There's grain reports, there's FX reports, there's commodities, there's all kinds of things that don't even make it onto this list. But the government is very normal, right? It's just it's a machine. Quarter hour, half hour, 1 hour, every 15 minutes. Watch the candles. Watch the kind of flow we get on the 15. Watch the flow that we get on a half hour, on the hourly close. These subtle little tricks is the difference between profit and just getting beat up all the time. You're looking for a change in sentiment, watch the clock. Got a really great trade yesterday, by the way. It's almost an advertisement for the kind of trading that I do. I'm a pivot point trader. This trade right here, if I'd have done it on the Nasdaq, I would have just been destroyed. The Nasdaq didn't stop there. It ran right through it. I did it on the ES and I scaled into the trade because I didn't want my whole position on it once. I grew one of my accounts 135% on that trade yesterday. Imagine what I just said. That's 100% growth. So I took an account and doubled it yesterday, and then add on another 35% in that one trade. Why? Well, I streamed all morning, so I couldn't trade it to the upside. But it was very clear where we were going. Yesterday's high. Couldn't miss it. We spent all morning going towards it. It was only going to do one of two things: get there and reject, get there and break through. So it would have had an inside day breakout, or it would have failed and rejected and came back down. We had all morning to prepare for this trade. Think about, what are we going to do when it gets there? How do I want to enter this trade? Where should my stop be? How much of my account do I want to use on this trade? This is one of those go big and go home kind of trades, right? Studied this trade in absolute detail for months and months and months. It's an institutional pivot point. Yesterday's high. Anybody trade this yesterday? A really great trade setup. If you didn't, why not? That was a freebie. That was a layup. So this morning we've got a really tight pattern, really nice sell-off due to some news that's going on. Now we've got this expansion, right? Price aggregates. So we're getting a little bit lower, a little bit higher, a little bit lower, a little bit higher. Outside candles, some expansion going on. We're going to look for this to end this consolidation. That purple line that you see running across my screen, that's a floor pivot. A floor pivot is a mathematical calculation. Old school way of asking, where's yesterday's average price? Think about the day, right? If we were to say the average price of the S&P on Monday was what? It was whatever that floor pivot is. So when we see trading going on above that pivot on today's price, we could put it in another language. We could say people are willing to spend more for the ES today than they were yesterday. they're buying it at a higher price than its average yesterday. May not mean too much, right? But we notice those floor pivots come in. There's all kinds of different strategies and there's all kinds of different pivots. And every one of those pivots that are out there were developed by an individual who wanted to do something different and then proved that he could. There's a Woody's pivot, Camarilla pivots, there's uh, SVE pivots, Persons pivots. Every one of those pivots has a book, a webinar, a video, a trade series. They've been intimately explained in excruciating detail on YouTube. So you can go out there and find Persons pivots, and there's like 90 videos where the guy who created it, Mr. Person, made videos explaining how to use his pivot point indicator. Same thing with Woody's. Woody's built an entire trading system around his indicators, including the pivot point. Woody's pivots. So if you want to be a pivot point trader, you could just use floor pivots. I do. I just use the floor pivots. But there's a lot more than just floor pivots. On Thinkorswim, if you type in floor pivots, you won't find floor pivots, but you will just find pivots. So if you type in pivot, the one that is the floor pivots is this one right here. It just says pivot points. How do we know that that's the right one? Well, I can read the code, but it also says that it's yesterday's high, yesterday's low, yesterday's close divided by 3. That's the formula. High, low, close divided by 3. Now you can run pivot points on anything, a 1 hour, a 5 minute, a 1 minute. Historically, though, what we normally use is the weekly pivot and the daily pivot. We want to know, are we above last week's weekly pivot? Are we above or below that pivot? Are we moving towards the pivot? Are we moving away from the pivot? Did we hit it and are we bouncing off? Are we about to hit it? These give us ideas about what is price going to do. What am I going to think about when price gets there? What's my trade going to be? So if you just want, quote, floor pivots on Thinkorswim, it's pivot points. Now, SVE pivots uses the exact same formula, but they went ahead and they added a few more. They added some institutional pivots. Yesterday's high low, that's in this pivot. That way, you don't have to go in and draw the line for yesterday's high and draw the line for yesterday's low. It draws it for you. So then you have the floor pivot and you have yesterday's high and yesterday's low. And then you can add another one of those, set it to weekly, and you'd have the weekly floor pivot and then the weekly high and the weekly low of last week. Trust me when I tell you, when price hits one of those levels, there will be a reaction. We don't always know what the reaction is going to be. It could bounce off of that and move in the other direction, or it could break through that. Knowing we're about to hit something is a game changer, right? Just like knowing yesterday, we were literally moving towards the high of yesterday, right? Well, towards the high of Friday. What did you think was going to happen when we hit that high of Friday? Something. And since we had all morning to figure it out, you could have built 2 trade plans, one in case we break through and one in case we reject. So floor pivots, Persons pivots, Woody's pivots. There's a lot of pivots out there. Every one of them has fully formed strategies, including Camarilla. Camarilla is another one of those pivots, but it's a little weird. Depending on which broker you use, Camarilla can be a little odd. Fully formed trading systems, right? Like I keep telling you guys, you don't have to reinvent the wheel. People have been trading forever. They've already done all the work. Stand on the shoulder of giants. For today, the ES, we are down 0.75%. We're going to expect to leave this range. I have every expectation that we're not going to be able to hold this range, right? The first range that we want to pay attention to is the RTH of yesterday. So we just really narrow that box up, right? Consider that zone 1. Add to that all of yesterday, the Globex low, all the way through to the highest point. Now this is an entirely different range and much bigger, right? And if you notice, it matches in between those 2 yellow lines because that's yesterday's low and yesterday's high. We don't expect to stay in this range. One of the pivot points we're going to be looking for is a break of yesterday's RTH. Should we break yesterday's regular trading low? Then we're going to focus on yesterday's lowest point, the yellow line down here. Should we get below that, then we will be outside of the box again, this being the box. A break to the upside, which is really unlikely unless, a complete and serious shift in market sentiment comes in, will have us challenging this area back here. I really don't see that we're going to get too far above that, though. So we could reclaim the 0.75% that we're down. That would get us to zero. We've got an ADR right now of around 2%. 2.3. So we could get back to the top of the range and easily see another 1% move to the upside. So we're still looking for a day that probably won't get it past 44.50 without some really big news. Trust me when I tell you, it won't be subtle. If we go to make a move like that, tick, trend, AD, UVol, DVol, everything's going to light up like a Christmas tree. You'll have a tape that's just ripping, right? So it won't be subtle. We start making moves to the upside like that. Instead, what we're really expecting is a lot of grind and chop, a lot of sideways action. And unless this economic news comes through with some very clear data, I really don't expect us to change the zone that we're in. And we're just going to probably hold that zone one, right? Zone one, yesterday's regular trading session high and low. So we're going to be looking for the economic news to be very clear, right? When we have very clear data, the market can make very clean decisions. Without that really clear data, then they got to stop, call the nerds, have them crunch the numbers, and make a decision about what they're going to do with it. The cog lines are in play. So kind of keep that in mind, right? Bring in the cog lines. We're right at that previous day's point of control. So that's a real big deal. It's lined up perfectly with the pivot point. Kind of keep that in mind. So we got our cog line. That'd be really close to the low of yesterday. It's not a coincidence. That move to the downside yesterday stopped right on the cog line. I mean, yeah, it drifted one tick, two ticks, excuse me, past the cog line by 2 ticks. It's another one of these pivot points, right? Just like I said, I'm a pivot point trader. Pay attention to the particular pivots that matter. We were dropping hard to the downside yesterday, and the entire thing was arrested right at the cog line. That's not a random line. I didn't put it on now. It was on there yesterday. It's on there the day before. It'll be on there tomorrow. It's a cog line. 43.11, 44.11, 42.11. So if we dump to the downside, we're going to look to see if we can find some support along that cog line. And if not, we're going down. You can see that we're inside the box, very clearly in the middle of the box. We're at the point of control on time, and we're below the point of control in volume. We're resting right on this volume node right here. If we break that, it starts to get a little shallow. So we're very likely to move through the 4,300 down to around 42.75 area. Again, that would be very close to the bottom of that box that we've been focused on. We break below the bottom of the box and we would expect an acceleration, right? Think about riding in the roller coaster and finally getting over the top of that last really, really big hill that it climbs and then taking it down on the other side of that hill. So if we break through that 42.50 area, and it's not much support there anyways, 4,300, 43.11, the cog line right in there. We get through that and it's going to accelerate. So we're looking at a day by day volume profile here. What we always want to do is plot forward yesterday's point of control. Right. So if we were to kind of zoom in here a little bit, this red line is the point of control from yesterday. We want to plot that forward because the first time we get to this point, we expect a reaction in the market. Now, after we've been there, and we have already been there, we've wiped it all out. It's no longer a virgin point of control. It's now been assimilated. It's done. We also want to keep track of how many point of controls are we getting in a row that are very, very close together, right? Start stacking POCs. Then when we get that, it becomes a very strong area of support and resistance. Right? It becomes a more critical level to pay attention to. At the moment, we've got two POCs very close together, just building up more and more and more and more activity there. For the Nasdaq, you'd see what I'm talking about here. If I had tried that reversal yesterday on the Nasdaq, I just would have been a loser right off the bat. It ran right through it, never even slowed down. But I haven't been using the Nasdaq like I normally would just because of how violent everything is. Trading in the Nasdaq right now, you got to go really wide on your stops. And the bid ask spread has just been really horrible. It's not been my go-to uh, for the last few weeks. So I'm really happy I didn't trade that yesterday because that wouldn't have worked out too good. We got a really tight zone here, just like on the ES. Yesterday's low to yesterday's high. We're talking about the intraday time frame right now. It's a very tight zone. I know it's really wide when you think about it, right? That's 300 points right there. Pre-corona, we would see a Nasdaq that would maybe you move $50 in the entire 22-hour trading session. 50 points. This is a 300 point range, and I just said that it's a small range. It's a narrow range. That's how violent the market is right now. It's still a small range. We're going to expect to maintain this range through the day. Maybe do what we did here, kind of expand a little bit and then come back inside. It makes perfect sense because that's where the liquidity is at, right? When we get to pivot points, it's not supposed to stop right at the pivot. It's supposed to go past the pivot a little bit. So don't just draw a line and think, oh, yeah, when price gets there, I'm going to hit it and turn around and go the other way. It's supposed to go through first because there's liquidity on the other side. So this is expansion. We're going to expect to see a little bit of expansion to the downside. That's perfectly normal. But we would still expect it to maintain this box unless something really drastic comes along. Now, I've already mentioned that we have a lot of things on the calendar, right? Almost every hour on the hour, all the way through the morning. Plus, a lot of people are going to be building up their trades for the Biden uh, State of the Union address tonight, right? So throughout the entire morning, we're going to be looking to maintain this or leave the range. And you got all this time to think about what am I going to do when it gets to the edge of this box? And it's going to get to the edge of the box. It's not a maybe, it's not a hypothetical. We can't stay here. We will get to the edge of this box. What are you going to do with it when it gets there? You have all the time in the world to plan that out. Should we break to the downside? We're going to try to hit this yellow line down here, 13.8 and a little bit below. All of this is yesterday's range. So that would still put us on an inside day. That would be yet again another inside day, right? We start to zoom out a little bit. There's Friday, there's Monday. Here we are again, Tuesday. We're still sitting in the same spot. We're just winding up more and more and more energy. We peaked outside the box, but we came right back in the range, right? Same thing again. We peaked out of the box. We're just hovering right here. So we're looking for a make and break situation. It's very likely if the news is muddled, we're just going to stay here and go sideways through the day, at least until lunch. Now, on the other side of lunch, that's where we got an opportunity to see a change in market sentiment, very similar to what we had yesterday. We're also going to want to really keep our eye on the news with what's going on over in Russia. They changed the way that this war is being waged in a serious way, and they're losing their patience and they're getting a little bit of egg in their face. I don't know what that's going to turn into, but I bet it's not going to be good. So gold kind of selling off a little bit. I heard it mentioned almost like a as a war indicator. The Ukraine indicator, I think, is what they called it. Keeping your eye on oil and gold and Bitcoin as gauges of sentiment of what's going on in the war. The move in Bitcoin, by the way, as a little bit of an aside, um, apparently Russia had put out some kind of restriction against money movement. People were wanting to move their money out of the ruble and say into the dollar. So they circumvented him by getting into Bitcoin. So that really aggressive, strong move in Bitcoin yesterday wasn't because everybody decided Bitcoin was a good buy. They were circumventing a restriction that said that they couldn't move their national dollar from a ruble into something else. And of course, if you're the one holding the ruble, you really want to get rid of the ruble, right? The value of the ruble is turning into like the value of the peso. Not so good. So they were jumping into Bitcoin. And that apparently had a lot to do with what happened with Tesla yesterday. You can read more about it on Bloomberg. But you definitely want to keep your eye on gold and oil. And you're looking for any kind of fade off, any kind of uh, pop aggressive move to the upside like this. Notice how it coincides perfectly with the negative news that took our market down last night. We had the S&P and the Nasdaq kind of testing against the high of the intraday. Some news came, just punched that thing to the downside, and yet it also galvanized gold to the upside. So when you're looking for validation or confirmation of what's going on in the move, you see the ES breaking out, you see the Nasdaq breaking out, and you're trying to answer a question: is this a real breakout or is this a fake out breakout? What's going on in gold? Because if it's running in the opposite direction in a very aggressive breakdown, then it's very likely a real breakout. Watch the VIX, the bonds, oil. Speaking of bonds, look at the aggressive move last night. It wasn't just in the 30 year, it is also in the 10 year. These are the indicators that we're wanting to use right now, right? These are way more valuable than anything that you could put on, say, SPY. Bringing up SPY and putting a MACD on it wouldn't be more valuable than looking at what's going on in the dollar, the bonds, the VIX, the oil, gold, Bitcoin. You have a very clear idea of what's going on in the market, then you have a much stronger understanding of what's going to happen on the intraday to Apple, Microsoft, Google. I went through the MOC yesterday and broke it down into the buy side and the sell side, and I shared those watch lists in the large caps chat room. And what that'll give you a chance to do, there was a significant change in the MOC yesterday, very, very large on the buy side. Well, they're not going to do that unless they have the capital. So, what did they sell to get the capital for the very big buy yesterday? And what are we rotating into? We want to look at that in more detail, break it down into its sector, its subsector, its industry, and take a real good look at the names that are in that list. Not as if, oh, wow, Visa's on the list. I'm going to go trade Visa. It was on the MOC. Nah, no. Well, what is Visa? It's not finance, right? IT. There was insurance names. Uh, Financials were hard in that list. It's a real eye opener on where the capital is going right now, right? Because they can say whatever they want, but money is a completely different story. And what we've been hearing out of everybody is, oh yeah, this market's getting ready to crash. We've got every single indicator out there that says this market's going down. Yeah, and yet everybody keeps buying the dip. So their mouth is saying one thing, their money is saying another thing. Follow the money. When it comes to following the money, when you come into the intraday, go to the visualize tab. Once the market is open, go to the index watch and pick your index. It doesn't matter. Go to the S&P, go to the Nasdaq, bounce back and forth, toggle it and open both. You can watch the money right there, capital flow, right? Watch the money. Where's it going? That way you have a much clearer understanding of what's going on in the market today. Be careful, guys. I can't stress it enough. Be careful today. All right. We're about to see a serious shift in market dynamics. So we're on TradingView, S&P 500. We want to knock that 500 down to around 100 names. 111 is pretty close. Got to change the multiplier just so the color scheme is a little bit different. Think of everything that was up yesterday being down today, and everything that is that was down yesterday up today. Rotation, right? So Tesla was up 7.5% into the close. They're down, or at least they were down 0.5% when I started talking. Salesforce, Walmart, Target, Raytheon, Lockheed Martin. The war machines are firing up, right? Daimler, Chrysler, Chevron, ExxonMobil, some energy names. Again, names that were down yesterday, up today. Linear regression, mean reversion. We'll set this one to the Nasdaq 100. We don't need a filter. It's already got 100 names. We just want to adjust the color scheme a little bit. Big tech. Big tech has been able to survive the worst of all of this in the last 6 weeks, 2 months. Sure, they're down off of their highs, but they're still up on the years significantly. So they're kind of the last barrage. And when we talk about bubbles, right, you always hear about the market bubble. Well, it's not one big bubble that bursts all at once and then everything crashes and burns. It's a bunch of little bubbles that get popped a little bit at a time. And it started in small caps, right? You've seen the Russell going sideways all year, right? I mean, it was like breaking records for how much it didn't move. Once those bubbles were gone in the small caps, then it moved on to mid caps. Now we're starting to look at the large caps, and their exposure to risk just increased exponentially because these mega cap companies are global companies. Their shipping, supply chains, the products, the services, customers, clients, it's all global. So their exposure to risk has just gone up a lot more, and the ability to pop that bubble just became a lot easier. So we really want to watch these last few names. They're the last names that are holding up the marketplace. We lose these, again, we're going down. And that'll be your FANG names, your large mega cap stocks. So they're up this morning. And just like when we were drawing on the whiteboard a little while ago, right? What did we talk about? You get that pre-market rally, a nice pop at the open, holds, a good 30 minutes or an hour, and then dumps lower than the previous day's close, right? And then and that's how we get that slow grind to the downside without freaking everybody out and have everybody running to the exits and all trying to sell the market all at once. That's the game that they're playing. Use it. Right? So we want to change this to pre-market change percent. And now where are all those colors? Right? So adjust this. We got a little bit of green down here. So we bring in the technology services, zoom in a little bit. DDOG, NTSC, WDA, Baidu, a couple of names on the list. Not very aggressive, right? All the chip names is getting whacked. Kind of that linear regression from yesterday. So we're looking at the NASDAQ here. How many names in the NASDAQ are down at least 0.5%? 30. Oh, that's not bad. Let's try the other way around. How many names are up in the pre-market 0.5%? 6. So a real flat market out there. And it's odd that it is flat because if you look, this doesn't feel flat, right? We're down near 1%, but we don't really have a lot of names down or up. Just kind of maintaining that flat structure. For the S&P, boom, boom, boom. 7 names are positive, and they are the War Machine. And of course, you get a little bit of retail in there. Down 0.5%, 45. So nearly half of the S&P is down 0.5%. I want to take it a little farther and say how many down are 1%. Not quite a quarter. Communications names, some banking, lots of banking. Right? So there you go. If you're looking for any kind of linear regression plays on the day, I would definitely keep my eye on finance. Finance and energy has been the play. My day trades have really focused on more energy in the last 3 weeks than I traded all of last year. This is that 7.5% move in Tesla yesterday, by the way. And if you notice, it had a beautiful inside day breakout, right? It had that doji candle and then that monster massive breakout. And if you have ever watched any videos on the strat, STRAT, that's what it's called. They talk about um, popcorn stops or shotgun pops or something like that, where price crosses through all of these various candles, right? And if you think about the investor that went short on this day, for an example, where would his stop be? Say above the high of that day. And anybody who went short this day, where would their stops be? The high of that day. And so as price was running through, triggering all of those stops, well, if you're short, what's your stop? Your stop is a buy. So that buying added to the buying that was already going on caused more buying. And then, of course, you got the gamma squeeze. The more that we buy options, the more that we force the market makers to buy stock, right? And so we can control the market makers and force them to buy stock in Tesla, which forces Tesla to go even higher. And it just becomes this out of control gamma squeeze. And then we get those significant moves like we saw yesterday. This morning, we're down in the pre market in Tesla. But if we're looking for a move like this to continue, then we're going to be looking for a breakout of this big day here, right? So we're looking for another inside day breakout, and the target would be back up to 920 by the end of the week. I don't see that, by the way. I'm just pointing it out, right? We're down in the pre-market, but only negligibly. We're barely down, considering how far we moved yesterday. It's a beautiful trend line breakover play, by the way. Speaking of signals, this is a capitulation candle. Notice the massive, massive, massive drop, the gap down, and then the rally back up with volume behind it. I'm on a daily time frame, right? And that's a capitulation play. It's where all the people who just couldn't take the pain anymore finally sold everything that they had, and the institution swooped it up and ran that thing like a mad demon. More than 70% of the Nasdaq is down below its 200-day moving average. By the way, it's one of those market breadth triggers. It's not what I was looking for. All right, so we'll wrap it up with the sectors. Notice the breakout in energy. So that pre-market candle right there, very large gap up from where we closed. We're outside of this massive range. We have a megaphone pattern going on here and a breakout of a critical level. So we're looking at the sectors this morning, kind of asking the question, what sectors are up, what sectors are down, and where would my play of the day be? Well, with finance getting whacked so hard this morning, a reversal in finance would definitely be something I'd keep my eye on, especially with the move in the bonds that we're seeing. Right, that move in the dollar, the move in the bonds, we start to see a serious shift in sentiment, and I would expect these financials to come roaring back on the other direction. I don't like going long in something that's already up 1, 2, 3% on the day, right? And I don't want to go short in something that's already down 1.5, 2% on the day. But running the XLF, running financials off of the lows means we could travel back up 1.5%. We would just be flat. When we're always trying to ask that question, has it gone too far? I really feel like I'm late to the game. It's gone too far. Maybe I shouldn't get in at this point. Well, if it's down 1.5% and you run it back flat, that means it still has the capacity to go higher another 1.5%, and it still wouldn't be considered having run too far. something to think about, right? Also, on that something to think about, you can see that we had gapped down from our close, and now we're trying to bring it back up again in the pre-market. So financials, something I'm definitely going to be keeping an eye on today. Bitcoin as well. They had a lot of sympathy from that restriction on the ruble. We're going to look for this to continue. You can trade Bitcoin in an ETF called BITO. That means you can trade options on it. You can go long and short in it. So, when it comes to Bitcoin, it's not like you got to go out and actually trade Bitcoin. You can trade products connected to Bitcoin or ETFs of Bitcoin. You could trade the bonds in an ETF, the TLT, right? We were just talking about that aggressive move in the bonds this morning. And if we're going to be looking for a change in sentiment and a reversal off of these lows, and we are at some critical lows in the bonds, we've got a lot of room to the upside. Just remember, on any of your swing trades, March is the game changer. It's when the Fed's going to be coming out with its statement, right? And they're talking about liftoff, and they're talking about reduction in the balance sheet. There's a lot of things on the table. So you want to be very careful with the swing trades. All right, plenty of names are up this morning in the pre-market. We want to look at the sectors that are not on the old school legacy list, right? Things like the crypto sector. These crypto names are not coin, right? They're names that are heavily invested in blockchain and or own a lot of coin. So a lot of names on that list this morning that are up. These look like short opportunities to me. Up 6%, 7%. Look for rejections like MSTR. We're at a critical rejection point. We're just getting to that 50-period daily moving average. This is just screaming for a reversal, especially after that massive run yesterday, right? Look at the gapped up market like that. So a lot of plays out there, a lot of opportunities. Riot is up more than 7% this morning. That number just doesn't look right. That's massive. Gold and silver kind of holding the line. Remember, those are the war indicators, so really keep your eye on those. Another name that we don't have sector-wise is the EV market. Looking at the EV market this morning, we're certainly not seeing any continuation of yesterday's aggressive move. Everything's getting punished this morning. And the pot stocks, not looking too good at the moment. Really think the two plays of the day are going to be energy and finance. Running energy back down in the other direction and running finance up in the other direction. So I got for you guys. Be careful, be safe, have a good day, and I will see you all tomorrow.